Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors. The high degree of leverage can work against you. And before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should not invest money that you cannot afford to lose. You should be aware of all the risks associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts. The first order of business when thinking about trend trading with the Bosslator is to get a reading of 200 on the Bosslator. I've marked that area on my chart with a vertical line. That's the point at which this currency pair has been away from the 800 period simple moving average for 200 candles or periods of time. This is a 15-minute chart for the Euro Swiss. Remember that your Bosslator indicator will not draw a vertical line through the middle of your chart. So don't write me an email and say, Rob, my Bosslator isn't working. It doesn't draw a line on my chart. What your Bosslator will do is show text in the upper right-hand portion of your screen, something like this chart over here, or your Bosslator will be a line underneath your chart running along the bottom, something that looks like this. But in order to conserve space on the chart for this lesson, I've simply written out that the Bosslator measured 200 at the point in time that I show here. That's step one, to just determine whether or not you can trend with the trade at all by getting a Bosslator reading. Step two is to move back in time on your chart and identify the point at which the financial instrument left the 800 period simple moving average. You can see there's a string of candles or a set of candles or bars on my chart right here in the purple zone where we went sideways along the 800 period simple moving average, and then the financial instrument fell downward and away from the 800. This purple area is critical. If you don't have an obvious purple zone area where the financial instrument moved along sideways at the 800 and then fell away or moved up and away, then perhaps this method is not applicable and you should use a different method of trend trading with the Bosslator. In instances where you can identify sideways movement along the 800 period simple moving average before it leaves and moves away from the 800, you can proceed. So step one was to identify 200 candles or bars, and step two was to identify a sideways movement on the 800 period simple moving average. We want to take the highest level in that sideways movement, and I've drawn a purple box, a small purple box around that area on the chart, and you can see it in the upper left-hand portion of my chart here. We want the highest point in this case because the financial instrument moved downward. We'll show an example later on in the opposite direction. Next, we want to choose the Fibonacci tool, and this is step three. Once we've chosen that Fibonacci tool, I'm going to simply start it out by clicking on the highest point of the purple zone area on my chart, pressing down the mouse button, and dragging my mouse across and to the right, and then dropping and stopping. I want to check my fib levels on my chart before I proceed, and I'd like to make sure that you have your fib levels set up appropriately as well. I right-click on the fib retracement and choose Fibo Properties. Here's the Fibo properties that you need to have on your chart. You need to have a zero line. You also need to have a 0.236 representing the 23% retracement. You can see in my MetaTrader charts, I also add a dash and then a percentage sign and a dollar sign. What that will do is it will show the actual price on top of that line. Makes it really easy. Super convenient. We also want to have a 38% retracement. That's done by typing in 0.382 on the level, and then in the description area typing 38% dash space percentage sign dollar sign. This will become important later on, and you'll be glad that you did this. Other levels that are commonly used in fib trading are the 50% level, the 61 or 62% level, the 100% level, as well as some levels beyond that. Those other levels are not as important. I've also included on my chart a 33% level. You simply write in the level area 0.333, and then in the description area 33% dash $, and then we're going to use two levels that are interesting that you're probably not aware of and have never seen before in your life. The first is a negative 21% level. We get that level by typing into MetaTrader in the level area negative sign 0.216, and then in the description the negative sign 21.6 dash $, and then below that we want a negative 0.5 and then a negative 50 dash $. In order to add levels that are not currently part of the string of levels that you have on your chart already, you click Add and then do the typing that I just mentioned. In this case, negative 0.216, and then we can move over here, double click, and type in a description. Now I already have a 2.16, so I don't need that anymore, and I'll delete that. Once you've got those levels included on your chart, you are ready to go, and you have completed the beginning part of step 3. I'm simply cleaning up a couple of things before I click OK. Step 1 was to identify 200 candles. Step 2 was to identify a string of sideways bars or candles, and then identify the highest point in that string of candles. Step 3 was to draw a fib retracement and set our levels up so that we were showing the 33% level as well as the negative 21 and negative 50. Once we have completed those 3 steps, we have a 4th step. We want to extend the bottom portion of our fib tool downward. We do this by double-clicking on the fib anywhere inside the red line, left-clicking on that line at the bottom, and then dragging the mouse to the side. You can see here that we need to move our charts forward so that we can see enough candles in order to do this. I want to stop this line at the bottommost, or the furthest distance downward that this financial instrument has gone at the point it reached 200 candles on the Bosslator. You can see here that that level is reached down here, and I've extended my fib tool from left to right, and it now shows a 23% retracement. At this level, 33%, 38%. The levels that we are interested in are between the 23 and the 38, and I've drawn a purple area right inside that zone. You can see that right now on the right-hand portion of your screen, to the very right, that this financial instrument is not inside the 23 to 38 zone. It's nowhere inside of that zone. If it does, however, rise up into that zone, we are going to sell this financial instrument. Let me show you how we watch for that. If the financial instrument continues to fall, as we are waiting for it to rise up into that 23 to 38 level, we continue to extend our Fibonacci tool ever lower. Every time it makes a new low on the chart, we extend it lower and lower and lower. You don't know where it's going to stop, but you do know that you want to continue to draw it lower over time as the financial instrument falls. Also, over time, I will draw a new purple zone box inside the 23 to 38 because the 23 to 38 zone will move as the financial instrument falls. So this is step 4. we draw a fib retracement from the upper left-hand most portion in the purple zone area at the top, and we extend that down to the lowest point that the currency pair has reached so far, starting at 200 candles, but continuing as it moves forward. What happens next is that this financial instrument does eventually rise up into the 23 to 38% zone. And you can see this a little bit closer up if I expand and increase the size of the candles on the chart. You can see that this is the first time since we began drawing the fib retracement that the currency pair or any other financial instrument has risen up into the 23 to 38% zone. It's the very first time. In order to get an entry on a trade, what we need to see this financial instrument do is rise up into the 23 to 38% zone and then turn around. That's step 5. Step 5 is to wait for this financial instrument to rise up into the 23% to 38% zone and then turn around. If it reaches into the 23 zone, just above the 23, and comes back out of that zone, that's our trade entry. Let me show you exactly the bar or candle that is the entry in this instance. Over here in this area, a large candle jumped up above the 23. And then subsequently, a candle fell down back through the 23, and that represented a trade entry. At that moment in time, we could enter a trade with a stop loss just above the highest candle that went above the 23. We'll make that stop loss red. And a profit target initially of simply the same size of the stop loss on your original trade. So in this case, we had an entry at 1367 and a stop loss of 39 points. That means we'll have an initial profit target of 39 points or 40 points to round up. As soon as the financial instrument reaches this profit target, we're going to move our stop loss. But in this case, it turns around and stops out the trade in this area here. And so that's a losing trade. However, what it does next is it rises up into the 38 area. If it rises up to the 38 area or above the 38 area, as it does right here and right here in these two locations, we can then set up an additional or subsequent trade. I'd prefer to see the financial instrument close above the 38 area. It won't always turn around on a dime or exactly, but I'd like to see it close above that area. I'll make exceptions from time to time, but that's what I'd rather see. If it reaches above the 38% retracement area, as it does on the right-hand side of the screen, we can trade this all over again by waiting for it to fall below the 33 mark, and that's why we have the 33 mark on our charts. If it falls below the 33 mark, I've put a small purple box right where that happens. That's a trade entry. A stop loss goes above the highs made when it went above the 38% line, and an initial profit target goes at a distance equal to the original stop loss to make sure that we can stop out at break even if the trade begins to go in our favor, but then subsequently turns around. Let's get an exact reading on that stop loss at break even. 37, let's just say 40 points for a stop loss and 40 points for a move to break even down here. That means that once we take this trade and sell this currency pair in the trend, and if it falls to our green initial stop loss, profit target level, which it does here on the right, we can move our stop loss down to break even and risk nothing on the trade. At that point, when that happens, the profit target on the trade goes to the 0 line, which is down here at the very bottom. That's the 0 line on the fib retracement. Let's see if we can get to that level. We do. So we get down to that level, and now we've got a healthy profit, especially when compared to our original stop loss. At the point that it reaches the 0 line, we can move our stop loss down to the 23% retracement line, protect some profit, and see if we can get all the way down to the negative 21.6 level. So we could move our stop loss again and move our profit target again. Once we reach the 21.6 level, we can move our stop loss to the 0 line and move our profit target all the way down to the negative 50% retracement level. And that's the point at which the entire trade closes out and we begin the process all over again. Let me repeat steps 1 through 5 so you can get a better idea from start to finish of what a trade like this looks like. We started everything off by counting 200 bars in the Boscillator. We waited until the Boscillator had moved 200 bars and drew a vertical line. That was step 1. We then identified a set of candles or bars that went sideways in the market and took the highest point of those sideways candles. Those candles, the highest point could come in the middle, it could come at the end, it could come at the beginning. In this case, it came at the beginning. We then drew a fib retracement starting from that high point at the left, and in step 3, drew it all the way across to the lowest point it had reached so far, and made sure that our retracement levels were all put in place. We then waited in step 4 for the currency pair, in this case, to rise up into the 23 to 38% levels, and then entered a trade when it came back out of those levels, and used a combination of moving stops and moving profit targets to secure as much profit as possible. I've never had much luck with moving my stop loss and trailing my stop loss, but when I did, this was the way that I did it, and this seemed to be as effective or more effective than anything else I ever used. You'll find that over time you'll see me just simply close a trade out rather than use a trailing stop. What you do will be completely up to you. In the next example, we'll look at what we do now that we've taken one trade with the trend and taken profit at the negative 50 mark.